Hi friends, welcome to another edition of some important information with regards to the stock market. Today we have some four stocks that we'll keep on the radar, or some of the stocks that you can add to your watch list. So there was on Friday 4th, China imposed retaliatory tariffs on US after the reciprocal tariff was imposed on around 60 countries across the world last week. The impact led to about 2,200 point loss on the US markets on the same day, which was the Friday, during the same evening. The correction in the US stock market and the tariff war was likely to impact on Monday, which is today, which is the 7th of April, across all European and Asian markets. The US is using its power to reduce its balance of trade situation by putting pressure on the world to give the US more power to export their products and services. So the markets have shown a bearish trend of late, while the Nifty is trading at a 17% low from its all-time high due to the retaliatory tariff wars between the global power nations around the world. Here's a list of few fundamentally strong stocks that have likely entered into a bear market, trading at below 50% from the 52-week high levels. Tata Motors, global automobile manufacturer under the Tata Group, the company has a wide range of portfolio including cars, vehicle buses, defense utility vehicles. Market capitalization of 225,000 crores. Company is trading at a price of 563 at around 11 a.m. on Monday, 7th April. Sorry, it's not PM, it's AM, which is about 52% down from its 52-week high of 1,179. The major reason for the fall is due to the introduction of the 25% tariff on import vehicles by the US President Donald Trump, a pause of JLR sales to the US, and many more. Adani Green Energy, holding company for its renewable power subsidiary, is leading player in India's renewable energy, managing a substantial project portfolio. The group is primarily involved in renewable power generation and ancillary activities. Market capitalization of 1,46,000 crores, trading at 874 rupees at as at 11 a.m., which is about 60% down from its 52-week high of 2,174. The major reason for the fall is the mounting regulatory pressures on Adani Group and the various other reasons. Adani Total Gas Limited is a city gas distribution company providing natural gas to a diverse customer base, including residential, commercial, industrial, and transportation sectors. In addition, AGL is investigating expansion into related areas such as biogas, uh, hydrogen, electric, and manufacturing of CCD related equipment and value-added services. With a market cap of 65,000 crores, the company is currently trading at a price of 566 on Monday 11th of April, which is 52% below its 52-week high of 1,190. A major reason contributing to the decline is the reduction of APM price, domestic gas allocation, and many other reasons. So the last is Vodafone Idea, a leading Indian telecom company, offers mobility, long distance and enterprise services alongside handsets and data cards. Is the third largest wireless operator in the country. The company partnership between two strong promoters, Aditya Birla Group and Vodafone Group UK, with a market cap of 56,000 crores. Company is trading at rupees 7.25 at around 11 a.m. on 7th of April, which is about 62% down from its 52-week high of 19.18. Major reason is due to the high debt of the company. The current situation is caused by planetary transitions. On 29th of March 2025, Lord Shani Saturn moved into the Sun of Pisces. Lord Shani met with a conjunction of Sun, Venus, Rahu planets already stationed in the house of Pisces. which is a very sensitive planet. So a major conjunction of 4 or 5 major planets happened during December 19 before the COVID pandemic took place. However, that time there was another planet which was Lord Jupiter or Lord Brihaspati, which also was a part of that conjunction, which led to a major global uh, economic downturn and also a huge concern for health of everyone. However, this conjunction shows impact on the economic front and the global economy. There would be people who may be individually affected by health reasons, but it is not the case as it was with the COVID pandemic. Yes, we need to take care of our health. It is important that we do keep a check. There are problems that could be created due to the excess heat and uh, the digestive problems people may have due to this heat and the summer. So the effect of this would be until around 31st of May. However, the major effect of the conjunction of Lord Rahu and Lord Saturn being within 15 degrees of each other would remain throughout the year and most probably till the end of November 2025. So the conjunction of Saturn and Rahu in Pisces will aspect Jupiter in Taurus, which will restrict Jupiter from guiding individuals with wisdom in their concerned matters. So, the reason this economic downturn is happening and affecting all the markets in the world is due to people's ability to, think and make decisions correctly. So, it has been advised that uh, anybody trying to make any major decisions of their life or making any new investments should avoid any sort of major decision making uh, until after the 29th of May 2025. The impact of this could, impact of decisions made during this 2 month period could be pretty bad and negative, and it can impact our lives at least for the next 3 to 5 years. So, any decisions which can be delayed would would be in the best interest and would be better if it is done end of May or early June. Anyway, this more information is available. You can read through them. We'll take through some of the stock details. You can see here today is down by about 7% after the stock market crash today. Market value of 210,000 crores, price to book value 6.58, face value 2, book value 87 rupees, PE of 34, earnings per share 16, cash of 5,150 crores, debt of 13,770 crores. The price return has been average, nothing exciting, can be considered moderately valued, lagging behind the market in financial growth. Profitability show good signs of efficiency and profitability. Stock is underpriced and not in the overbought zone. High of 1,179, low of 546, current price 573. Return on equity 49%, return on capital employed 20%, book value 275. So the variation in book value between one site and another site. So probably the book value shown on the other site could be from the previous year. So I would suggest we look at this point more accurately for more information. Then company has reduced debt, good profit growth in the last 5 years, 93%. Tax rate is low. Promoter holding has decreased by 4% in the last 3 years. comparison between other companies in the industry: Force Motors, Ashok Leyland, Electra, Greentech, SML, Isus, and Tata Motors. Most important point is to check the return on capital employed. So you have ranging from 15 to 23, which seems to be a good industry average of about 20. Median is about 20. Then you can see the sales are not consistent. You can see another quarter the sales were higher in December FY 23 quarter, 24 quarter, and Q4 FY 24 quarter. Now seems to be doing some sort of catch up. So financials have not been meeting the expectations of the market and not been able to perform the way it did about 4 5 quarters ago. So something that is causing an impact apart from the global markets as well. When you look at the next stock after Tata Motors, this is the yearly performance trend. Net profit hasn't really changed much. That is the reason why uh, there's pressure on the price of the stock. Then moving on, this is some of the financials again. Compounded sales growth last 3 years 21%, last 12 months 5%. Profit growth last 12 months has been very good, 58%. Again, quarter on quarter basis, not keeping consistency is the concern here. Stock price minus 39% in the 1 year. Return on equity seems to be good, very good. In fact, the best in the last 10 years. Reserves have increased, which is a good sign. Moving on, Adani Green Energy, 6% down today, 55% down in the last 1 year. Market cap is 1,37,000 crores. Price to book value 17, face value 10, book value 51. So 17 times its book value. Debt is 23,000 crores. Cash 6,000 crores. ROE minus 11%. So on the cause of concern, stock is underpriced, not in the overbought zone, so a lot of pressure on the stock, which is the reason why there has been such a big correction in the price. Financial growth moderate in the last few years, seems to be overvalued, so hasn't fared well. Then high of 2174, return on capital employed about 10%, return on equity 14.7. The company stock trading at 13 times its value. Company is reporting profit, no dividend, low interest coverage ratio. Debtor days has improved, which is a good sign. Good profit growth comparative to the other industries. What is important here is return on capital employed. Adani Power has a good return on capital employed, and the others are in the range of 8 to 9%. So not the best returns available in terms of capital employed at the industry. You can see here net profit has been fluctuating up and down. That is one of the reasons, and the market sentiments overall as a stock market and the industry is impacting the overall uh, sentiment and the price of the stock. Expenses you can see again fluctuating. Earnings, net profit also fluctuating from quarter to quarter, then year on year also. It has actually grown and done well. However, the sentiments are impacted because of the results on quarter to quarter basis. That is what is likely to impact the stock price. Moving on, not a very uh, great view. CGR price minus 51%. return on equity 15%, then profit growth minus 11% in the last 1 year, sales growth about 16% in the last 12 months, reserves have increasing trend, which is good. Then shareholding, promoter shareholding 61-13, DIIs is low, public is high. Again, it's going to be a major impact. DII is not participating or not having a shareholding here is going to impact in the overall long term stock value and performance of this company. Adani Gas, total gas 4.4% down today, 42% down in the last 1 year, 62,000 crore market cap. Again, the earnings per share 6, promoter holding 75, profit growth 23, return on capital employed 21. Hasn't fared well, valuation is overvalued, lagging behind market financials, showing good signs and profitability. Stock is overpriced, not in the overbought zone. Face value 1 rupee, book value 35, stock P of 93, which is high, ROC 21, ROE 20.5. Stock is trading 16 times its book value compared to other companies. Has the second highest market cap. However, what is necessary here is the return on capital. So all the companies except GAIL India 14 are above 21, and the industry average is 21, which is good. Mahanigar Gas 36%, which is amazing. Uh, it's on a growing trend, so it's a good sign, growing trend, but not maybe as expected. Uh, these sales haven't grown as expected to the market sentiment, which also goes with the net profit. Last quarter, the net profit has dipped less than the previous quarters, which would impact the overall price value of the share. The expenses, though increasing, the net profit hasn't increased much in the last 1 year, comparatively impacting the stock value. Some financials to look at. TTM sales growth 9%, profit growth 12%, return on equity about 20% overall. Reserve increased, which is a good sign. Then we look at the last company here, Vodafone Idea, 8% down, overall 45% down in the last 1 year. You can see the market cap is 52,000 crores and the enterprise value is 259,000 crores. So, though the company has value taking, but is not able to pay off its high debt, which is the reason why the company is not been doing well. Uh, it has to pay government a lot of dues and spectrum money, which is the reason why the stock is at such a low price. So mostly to do with -4 as the earnings per share in the last 12 months has a large number of red flags. Stock is underpriced and not in the overbought zone. So people are reluctant to buy the shares and trade in this company because of the profitability concerns and the long-term liquidity of the company. So at the end, when the company is going to find it difficult to pay the next set of dues, maybe after 2 3 years, and the AGR dues that they are supposed to pay and invest in the growth of the company, they may not be able to achieve that, and it's been making a loss, which again adds to the problems and the reason why the company has been avoided by many. So nothing much to show here. You can see the various financials here: minus 3.6, book value is minus 13, promoter holdings increased. I guess with the most recent information received is that it has gone ahead and issued about some 27% government stake in the company, and that debt has been converted into equity, which leads the government to hold about 49% of the stakeholding, and the promoter holding will remain about 51%, which makes it still the company to be able to be the decision maker. Overall, promoter holding has decreased in the last 3 years, minus 33%. So nothing much to really discuss here, guys. We'll end this video. I don't want to make it too long. However, just keep these stocks in mind and keep some information that I shared about the astrological impact on the share market as well, so that you can manage and monitor the stocks for the next 2 months. Thank you for watching. Please share this with your friends, family, and associates, those who may benefit from this information. Have a good week, and we'll catch up with another video soon. Thank you.